Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Get ready, fellow traders, because the excitement in the market is far from over. You might have thought that yesterday's Fed interest rate decision marked the peak of this week's Black Star events. Well, think again, because today's economic calendar is just getting started. At 2:15 South African Standard Time, brace yourself for the European zone interest rate decision, where we are anticipating a 25 basis point increase. This could potentially send all the euro pairs skyrocketing. And that's not all. Later in the session, we'll witness the release of the core retail sales report, the Empire State Manufacturing Index report, and the unemployment claims report. These reports have the potential to create fantastic trading opportunities for all our fundamental traders. But hold on tight until the very end of this video, because we have something special in store for you. We'll be sharing our technical analysis on foreign currencies, indices, and commodities. You won't want to miss it.
Let's move on by having a look at what's making headlines within the financial markets today.
Let's dive into currency news. The US dollar slid after the Federal Reserve expects a decision to hold interest rates steady. However, they signaled that borrowing cost will increase by another 50 basis points by the end of December. The euro made some gains and is currently trading up 0.3%. Against the Japanese yen, the dollar fell 0.2%. The FMOC, in their unanimous policy statement at the end of the two-day meeting, mentioned that holding the target range steady at this meeting allows the committee to assess additional information and its implications for monetary policy. Fed Chair Jerome Powell, during the press briefing, indicated that the US Central Bank is getting closer to its target on the benchmark fund rate. Now let's shift our attention to the world of digital currencies. Bitcoin experienced a drop of 3.65%, losing $947 from its previous close. The world's biggest cryptocurrency is currently down 19.5% from its year high of $31,035. Ether, the coin linked to the Ethereum blockchain network, also dropped 5.36%, losing $93.30 in the previous close. Moving on to what's making headlines on Wall Street. The relentless gains in the US stocks took a breather yesterday as the Federal Reserve indicated that interest rate hikes are still on the table after pausing its tightening quarter. The Dow Jones Industrial Average fell 0.5%, with investors closely watching the Federal Reserve's policy report. However, chipmaker Nvidia rallied around 2%, soaring to an all-time high of $422.76. Surpassing $1 trillion market capitalization once again. Now let's turn our attention to the exciting world of commodities. Crude prices experienced a drop of almost 2%, erasing most of their gains from the previous session. The reason behind this decline was data showing that crude stockpiles grew 7 times more than expected last week. The Federal Reserve's caution about potentially resuming rate hikes in July also dampened the mood for risk-taking across markets. It's important to note that the rate hikes and recession worries have played a significant role on this year's 15% drop in crude prices. Lastly, let's talk about gold. Surprisingly, the yellow metal saw little support even as the dollar sank to 3-week lows after the Fed's decision. The prospect of more rate hikes kept traders cautious about non-yielding assets. While the Fed held rates steady for the first time since starting its rate hike cycle in 2022, they also increased their benchmark forecast to peak at a rate of 5.6% in 2023, suggesting at least 2 more 25 basis point hikes. Initially, gold was expected to benefit from the prospect of static US interest rates for the rest of the year, considering that higher rates increase the opportunity cost of holding gold. However, the anticipation of future rate hikes may overshadow the yellow metal's appeal, even as global economy conditions deteriorate and the demand for the safe haven increases. Now, the moment you've been waiting for has arrived. Let's dive into our technical analysis for today. First up, we'll analyze USD-ZAR, which is still trading within the descending channel. It's currently just below the primary resistance level. If it manages to retest the resistance level at 18.5, we could potentially see downside momentum back down to 18.2. On the other hand, a break of the channel and a close above 18.65 could ignite a fresh rally, pushing it back up to 19.3. Shifting our focus to the Nasdaq 100 analysis, we have to ask, will the bullish momentum in US tech continue? If we close above 15,016, it could ignite the afterburners and drive this rally all the way up to 15,300. Now let's turn our attention to crude oil. WTI is currently trading just within the primary support zone. If we see a close above 68.5, it could trigger a correction back to 69.7. However, if the support breaks and we see a close at 67, it could solidify the decline and send oil tumbling to $64 a barrel. Finally, let's analyze gold for today. The yellow metal is currently trading at an extremely critical level within an expanding channel, just inside the primary support zone. If it breaks and closes below 1,930, gold could experience further declines. Alternatively, if it manages to break back above the support and close at 1,940, we could potentially see a correction back up to 1,950.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.